Hey everybody, I'm Art Wood. I'm your host of Putting the Real in Real Estate, and super glad to be back from Ireland on spring break. And I got a good friend of mine, Graham Massell. We're changing things up, Graham. Actually, let me tell you all, we're changing things up a little bit because we were always going to have residential real estate agents on here. And I've loved all my residential real estate agents, but Graham is a commercial real estate agent. We're happy to have you on the show. We got high bars for you. You're the first of many, I guess, but welcome to the show.
Sounds great. Thank you very much for having me, Art.
Absolutely. Graham and I have known each other for a few years now through a networking group, and always had the highest regard for him. He's got a great story that's, like and unlike mine, just how much family means to you and to your business and what it was for mine. So I felt like it'd be a great story to share. And we didn't, because we were rushed, because again, I just got back from Ireland and this was going to be a podcast with a Bloody Mary in hand, but I didn't have too much time to do. So you'll have to come back and we'll do it again, do it right the right
It's
time.
okay. I'll come back for another drink soon.
There you go. So really the idea behind the podcast is to show your peers that misery loves company, if you will. So it's like, hey, it's really hard. Life is hard. Real estate's hard. This is how we get through it. This is how it's excelled. And then for the general public, I would love to find, I want them to see what's happening behind the scenes.
Yeah.
Because, for instance, somebody said, I just responded to a testimonial, and they're like, man, everything was just so flawless, and da-da-da-da-da. And I'm like, man, if you only knew. Right? If you only knew. So tell us your story and how you got into commercial real estate and all the things.
Yeah, absolutely. First off, thanks for having me on the show.
Sure.
Happy to be here. So I'll touch on a few of those things. To begin with, family's been in the business for quite a long time. I'm a fourth generation Atlanta commercial realtor, but family's been doing it since 1913 here in Atlanta.
That's fantastic.
So it's a long history of commercial real estate. Back in the day, we were an all-in-one shop. I help you source land, help you buy the land, help you build on the land, help you lease whatever you build. And the company's gone through a handful of different significant changes over the years due to some different family operations splitting off into some different ways, and a little bit of politics here and there by some family members. But today, most of what we do is help clients identify opportunities, identify income-producing assets, development sites, put together complex assemblages, and really go through some of the harder, complex deals than most brokers would do. But it's a pretty busy business here in Atlanta Metro. There's a lot of opportunities, a lot of growth in some of the not just core central area of the city, but as well as suburbs and areas that are typically your secondary, tertiary markets that have a lot of growth. As to your question about getting through things, there is a little bit of challenges with clients here and there, and it's definitely, deals are not as pretty as they may seem. When people think about real estate, they think it's an easy business, but I'll tell you it's certainly not.
And I think, and we'll get there, explain to the public, if you will, what the difference is between a commercial realtor and a residential realtor.
Yeah, I'd say there's a couple of major key differences. Commercial real estate is usually an investment, an income-producing asset, or a development, or a grander, property type than just a residential. So you have a whole bunch of subtypes of commercial real estate. You got your multifamily, which technically in Georgia includes anything over 4 units. So a quad is considered both residential and commercial, but over a quad is technically commercial real estate by Georgia law. Land can be commercial or residential. It just depends on what it's zoned for and what's appropriate. So a little bit of differences.
It is interesting to me, too, that people say, do you do investor loans? And, yes, I do. But then they go, oh, great, I got this building. I'm going, whoa. Hold up, and that was the funny thing is, again, the whole Ireland jet lag, the fact that if this is your first time tuning in, I'm a residential mortgage guy. So there's a big difference as well between how you underwrite a residential mortgage versus a commercial mortgage.
Well, that's one of those things. Some product types, multifamily, which can include, townhome subdivisions. It include attached, or detached product type, whether those are residential homes. There's a commercial mortgage that happens when a developer is buying a site and then going through with a construction plan. Developers, investors don't always just buy things with equity and buy it all outright. They'll put a loan on it, which means there's either a construction, a bridge, or even a full acquisition loan as well. So you're talking about 3 different loans that have to either be one lender in a coordinated fashion, or multiple lenders that are all working together on an asset type, and how that finished product is going to come together.
Yeah, well, you know, the other thing I thought about too is typically you can look at it and say, if it's a business, it's commercial. You know, if somebody lives there, no, I can't. You really can't say that either. But I have some clients that will go out and they have 30 homes secured by one mortgage, which is a blanket mortgage, which is a commercial loan. It's not a residential loan. So it's just interesting. I think the bigger differences are probably more, I don't know, that's not fair to say, though, to say on the lending side, because it really is more cash flow and common sense type stuff, other than if you have a 680 credit score and you put 10% down or whatever, and it's not backed by a government agency or whatever, you know, and there are so many folks that come in and say, man, you can, and this is on both sides, you know, I pay my bills, I've got $500,000 in the bank, and like, but look at your tax return. You sure you're not making any money. You know, the resident, or you know, the tax preparer, that's how you know how good they are, by how much, you know, they show you. Like, oh, you know. Anyway, so that's interesting, but that's on the finance side, and probably neither here nor there. But you know, I do know real estate agents on both sides have to partner with really good finance folks to make sure that all the work they do comes to fruition.
Yeah, I'd say, you know, one of the most important things is having a toolbook of, you know, key people to call when you've got an opportunity at hand, because some lenders work better for certain things than others, especially when you're talking commercial property. You can, you know, depending on the product type of, is it retail versus is it industrial versus is it apartments, certain lenders like different products. Yep. They like to play in different spaces. Of course, you know, a lot of them want to get the business banking as well. So, you know, certain times it's, well, here's my client, here's his project, and then they say, well, what else does he do, and how else can we get involved? So you might not get the same loan offerings based off of just the product type. It might be which bank is more suitable, and it could be a public bank or it could be a private lender,
right?
You know, which likes the different project and then likes that client and their potential other businesses. Because I've had clients that, you know, we're doing a project, and yeah, it looks like a great project, but the lender that they work for their other businesses isn't interested in being in that product type.
Yep.
And they don't want to add any of that to their portfolio, so they've got to turn to me and say, I've got to find another lender to help me do this project. And that's when I'll try to bring a variety of lenders to the table. Now, obviously, there's many differences between public and private lenders, but I generally work with all sorts of different banks and lenders, people with debt that like to play in that space.
Well, and I even thought about it. Of all the commercial lenders that I know, they'll stand up and say, yeah, we're really not doing the medical space right now, or, you know, we're really not doing the retail or whatever, or we're only doing owner-occupant. And so that's funny to me, because, again, with my world, I can do anything that, and I don't specialize in one thing, because I can do everything on the residential side. So it's interesting. All right, so tell me, because this is one of the things that you and I are working on a little bit, or you brought us in on. Tell me and tell the public about assemblages and what's entailed in that. What's the benefit? Who benefits? All the things.
Yeah, sure. It's not low-hanging fruit. I'll tell you that. If you're breaking into commercial, just recognize it takes a lot longer than residential. Just in general deal types, commercial versus residential is a totally different beast when it comes to the timeline and the hurdles you have to jump through to get a deal done. But then an assemblage is a next level kind of complexity, because you're dealing with different personalities, you're dealing with different people's motivating factors. In residential, you have certain motivating factors which somewhat compel to commercial in the commercial world, or businesses as well. A death, divorce, you've got debt, you've got
the 5 Ds.
A handful of them that go into why somebody's motivated to do something. Well, in assemblage, you kind of have to peel back the onion layers and find out what the motivating factors are, and really understand between all of these group of people what is going to cause everyone to come together for a sale. An assemblage, we've got multiple in the works right now that are in the condo space, multiple in the works that are, and that condo space is multiple condos in one building. It can be multiple condo properties adjacent to each other. It can be townhome product. It can be single family or even commercial assemblages where it's multiple parcels next to each other that just makes sense to be, redefined and redeveloped for something greater.
So I'm going to dumb it down a little bit. So, you have a condo building or several condo buildings, older, potentially needing major upgrades and everything else, and have somebody like Graham come in and say, I've got an investor, or I've got investors that are interested if we can get all of this sold. And oftentimes what I feel like it means is that you'll get above market asking a lot of times when they all sell. But if you can imagine going into a 250 person apartment building and talking 250 people into selling their houses.
Yeah, that's usually where there's a lot of challenge and time to put into a project. These can often take 6 to 9, even 12 months before you've even got the property up and on market, right? And what I say by that is you've got to get a lot of people to come together and understand that, well, here's why your individual unit or your individual property is worth more as a whole with all of these other things.
Right.
And that's often, whether it's in Atlanta or other markets, due to a rising factor of land values. It could be demand for housing product, could be demand for new commercial product. And assemblages happen across the product type spectrum in commercial. People even assemble land together for industrial parks. It's one of those things that you've got to get people to understand, well, your individual unit sells at this by itself, this level here, but all of this acreage that your unit's sitting on together can be valued at this. And its redevelopment potential, when said and done, is valued at this. And that's something that people have to understand, and that's a very long discussion, and obviously people have their own emotional ties sometimes to properties, which is something to get through.
A lot of times.
Helping folks realize that sometimes that, this is the right time to sell to
Right.
get not only a fair market value, but then greater than that fair market value, because
Right.
the timing is right for a new opportunity to come to market. And that's really about highest and best use of real estate.
Well, and it makes a lot of sense. And again, this one we talked about, the HOA demands and what's happening. Those are prime targets.
Yeah, that's one of the things, whether it's here in Atlanta, whether it's down in Florida, whether it's, across the country in some of these major metros where you have older product type that unfortunately, might not have had the love and adaptive,
the love.
the consistent upkeep that is required. Those capital expenditures can compound later down the road. And, it's nobody's fault. Obviously, it's a tough decision to by a board to have to come together about making repairs and putting costs on homeowners. And even if you are one of those homeowners, an HOA board is a responsibility, and it's also a challenge that everyone has to deal with if you are on a board, of making the best decision not only for yourself but other homeowners. And sometimes, there's not always the best advice given to those boards by whoever their consulting body may be. So those can motivate factors in a way that then compounds the motivation later on in life, whether of that building or even of those owners of, well, we haven't done this and this needs to be done. It can be quite costly. So,
Heck yeah. Well, and I want to touch on something else too. You mentioned is real estate. Again, the differences between residential and commercial is, yes, residential generally, you don't just pop in and sell a couple houses. It does, so we look at in networking groups and stuff, you got the homeowner's insurance agent that he better be selling like 3 or 4 policies a week to make a group or that time worth it or more, just out of that. But for you, it's like, all right, well, if I can get one good deal a year out of this group, that's a good deal. And it's a shelf life. It's like all of a sudden, because you're not dealing with things that are $300,000 typically.
Yeah, absolutely.
You add 3 more zeros to that.
I would say, we deal with product type, typically in that 1 to 20 million range on a regular day-to-day basis,
right.
Just in terms of whether they be business owners or investors seeking assets to acquire or businesses for their, properties for their business. But then some of these larger deals are in the 40 million plus range, where we're actually bringing it to a large development firm that usually has institutional size capital behind them, whether that's REITs or pension funds, that, they have to put money to work, and they're looking for unique sites to redevelop or do a bigger project. So so I don't need 100 deals a year. I need a handful of deals that are pay well. Obviously, I'll look at every opportunity because to me it's about evaluating where does this client fit in the spectrum of deals I've got on the plate, and how should I either best advise them whether they're going to be a client of mine, or I'm going to refer them out to another broker, whether that's a commercial or residential agent, somebody that I know can get the assignment done. But we treat every client in the same lens of what is the bigger picture, what is the wholesome approach that's going to be the best fit for us to advise you, but also where you want to be later in life. Because while your deal today might not be the right size fit, I'm sure there's something in somewhere you want to be, and we can advise on how to get to that place.
So tell me about, this is the coolest story, by the way, Jolene. Isn't that the name of it?
Yeah.
The female sports bar, which to me, I didn't even know what a female sports bar was, but it's a cool story. Tell us about that.
Yeah, Jolene, a client of mine, Chelsea Fishman, has a project where it's Atlanta's first women's sports bar. So she's started with pop-ups around.
Tell them what a women's, because I didn't know. What is it? What? It's not just women-owned, but it's women's sports on the TV.
Yeah,
right?
So the focus is women's sports, showing all sorts of growing women's sports, both professional and collegiate athletes, which is a growing sector of the sports world, and how that gets to be to that level of televised, national professional athletes. It's definitely a mission that I think is a huge importance. I've got a sister, and she competed in sports as well, and I've got plenty of friends that were in that playing field as well, and I just thought she was very pro, go-getter kind of attitude that I said, I'll help you find some space, and I'm happy to say we're kind of working towards a deal right now. She started off as pop-ups and watch party events, and it's turned into the seek for a full-time official space. So excited about that one.
And I haven't gotten to go yet, but I really do want to go. I think that's unique. And what he's not telling you is he is instrumental in the business planning of it as well.
Yeah, I help clients kind of on a full portfolio look of, well, who do you need to bring to the table to be successful, whether that's capital or strategic consulting, really to make the business plan work, because I want a client to be successful in their endeavors and then turn around and say, I'm making so much money, what do I do with this, Graham? Right. And then I say, well, here's some properties, some opportunities for you to invest and help them, further their goal. Because, my end game is to make you successful so much that you want to turn around and help others become successful. And turn to me and say, who else can I invest in? Where can I find opportunities to make my money work for me? So that's the joy of what I do.
So what I was about to ask was the favorite thing of what you do, but I think you kind of just answered that. What's the least favorite thing about what you got? So I don't care how happy you are. Don't sell me a load of crap that you love everything about it. We're all adults here. What do you hate about it, about the business?
Well, I'll touch on what I like. I really enjoy people finding their passion. And that to me is a level of understanding what they enjoy, what they like to do. And sometimes that's, for some clients, it's, well, I'm ready to retire. I'm ready to go spend time with my grandkids. And so that's an important piece of the puzzle, but that's how I understand somebody's motivating factor around a property, around a decision of investment, around a portfolio that they're looking to build. Creating legacy, all of those kinds of things, that is an important piece. I'm fortunate to be where I am in life, not only from family investments, but also just a background of people, my parents that kind of pushed myself to go do whatever you want to do. I wasn't forced into commercial real estate in any means. I just found it to be a path that I enjoy. I have my other side hustles and businesses and fun that I do, but, that's a piece of what it is helping people go pursue their passion, right?
Okay.
A passion for purpose. In terms of things that I don't like when, people apply stereotypes to things, which is often, what people...
In life, but how's that?
Yeah, but they also do it to professions. It's interesting, people are have no problem sometimes signing a retainer for a CPA or an accountant, an attorney. But then when they go to sign up to work with a commercial realtor, they're hesitant. They don't want to do it. They think that it's some egregious thing, and quite frankly, it's they're non-binding contracts. You can terminate if you don't like me. If you don't like my work, you can terminate it tomorrow.
So it's just like a buyer's brokerage agreement, basically.
Well, but then also the aspect that sometimes they don't understand the work that goes into a good commercial realtor, right? There's plenty of people that'll list a property no matter what, but to me, I work on more of an advisory capability, and I only get paid if the deal closes. So I got to perform to make something happen. And sometimes whether or not a client will listen to me or take my advice can be frustrating. I want to make somebody successful. So again, that's how I get paid is on successful of the opportunity. So obviously that's one thing, but then there's always a tough time sometimes getting people to come to reality.
Oh, yeah.
Which is often a tough challenge, but then it comes back to some of those motivating factors sometimes to help people get a basis of reality, show them the comps, show them what's going on in the market. Having a broader understanding of not only the microeconomic level, but the macroeconomics of what makes a deal happen in commercial real estate is such an important factor. I mean, people think that pricing is just based on comps. Well, where interest rates may be, may totally disappear some element of where pricing could be. So that's a big challenge sometimes in deals, is helping people have a basis of reality.
Yeah, and I think that's from a buying or a selling perspective, right? It's like you want to list the property. I think it's worth $4 million. Sweetheart, there hasn't been anything more than 2.5. And business is moving away from and it's hard because there is less emotion. There's not no emotion, but there's less emotion in a commercial deal than your own house. And I had the property assessor guy in DeKalb County. That's whatever he is. He came and did something at Tucker Business Association, and he's like, when you want to sell your house, you want as much as you want. Your value is this. When you look at Zillow, you want it to be up here. He says, but then you get that taxable amount at the end of the year. You're like, I can't believe they think it's worth that. Now. There's another piece that I want to touch on as well. You say that since 1913, whatever. Your family business has not sold any real estate.
Yes, that side of the business is run by some cousins of mine, the Selig Enterprises, and our family's just been a long believer in Atlanta ever since we first acquired a property here. That the goal is to build a city that's really important to people, that's got strong economic factors. And that's kind of where that belief has come is, real estate is finite. They're not building more property. Now they try to with sand in places. But, you can't necessarily build where there's no sturdy ground. And, to us, what started off as convenience stores has grown into properties of all types, multifamily, industrial, retail, medical, you name it, hospitality, all across Atlanta Metro and throughout the Southeast. But, really that aspect of land continues to go up in value when you look multi-generational. If you think beyond just a 5 and a 10-year horizon and you think, well, where am I going to be in 20 years? And where are my kids going to be in 20 years? And where will their potential kids be in 20 years? Now you're starting to think more on a legacy level. Building legacy wealth, generational wealth that really compounds and helps set people up for success in the future. Now, obviously, you have to teach the right practices between those next generations on what that value is and why they should hold on to it and how it will help them in the future, which comes with a lot of both moral and ethical and practices and principles around sound money and understanding what money is a tool for.
Sure.
Money is called currency for a reason. It has to flow somewhere.
Okay.
And I personally believe that
I like that. I hadn't heard that.
The value of money is often something that, how quickly can it move from assets to innovation. And that, to me, is something that's an important thing. I am going to touch real quick on the tax assessor aspects. It's funny, in the commercial world, I've done multiple deals where I sold at the top of the market, price per square footage, a price per acre. And it's funny, I've had landlords, property owners call me and say, you know, why did you sell that property at that price? Now everything around it is much more expensive. And I say, well, don't you own property right next to it? And they say, yeah. And I said, so I just improved the value of your property,
yep.
But you're complaining that I made other things around it expensive, which is a funny aspect in itself of, you know, nobody wants to buy something expensive, but I didn't create an expensive scenario. I proved the market price.
Well, yeah, I think you find the same thing with gentrification. You know, you get the people that are being pushed out because it's getting more expensive, but they're also getting more for their house when they sell it. So it's you know, it's damned if you do, damned if you don't, I guess.
Right, definitely so.
Well, we actually have to start wrapping it up a little bit. By the way, I was going to tell you, did I tell you who made that guitar?
No.
Ellen Rogers.
Oh, wow.
Yep, she's a good friend of ours from Marino Associates and a law firm, and she has donated that here, which just happens to be a good friend of ours. And also, I was also told on a much smaller lesson was never to sell musical instruments either. I did. So that one's only like a 1980 gilded guitar, but I have a few legacy instruments myself, but the other non-legacy stuff I sold, but they're on a far less level than buildings and stuff. So in a parting question, if it wasn't for commercial real estate, what would you be doing?
Tough one.
I mean, you were kind of from the womb. You were born for this. So what else? Mine would be a rock star. Just
when I was a little kid,
yeah.
And I played piano and guitar and sang, it was probably a rock star.
All right,
definitely.
Do you still play piano?
Unfortunately, I don't.
We always need a good keyboardist.
I'm not. I mean, I'm sure I could pick it up real quick. I just
right?
don't have one at home. But you know, it's one of those things. I love music. It comes from my father, who loves music.
You have the long hair.
Yeah, that too. Yeah, but. You know, I love to cook. Food and bev and hospitality is a big passion of mine as well. I grew up in the restaurant business, worked at several restaurants around Atlanta, worked in hospitality while I was studying at College of Charleston.
Okay.
So I've worked in high-end steakhouses.
I love Charleston.
And, you know, from there, that's probably the space that I'll be in one day is owner-operator of some food and bev hospitality venues. So I'd probably be in that space. It's a very fast-paced environment. No day's the same. So if I wasn't doing real estate, that's probably where I'd be. But I love what I do today.
My wife has threatened me with divorce, basically, if I ever bought a restaurant or something, because I love the idea of being the guy that just runs around. I don't want the serve or whatever. I want to be able to guy walking around, shaking hands, buying people shots, and all this kind of stuff. But anyway, thank you so much for being on with us and with me. We're together. It's family means a lot to you, and you know, I'd even get in. I mean, I worked for my dad right out of college, right out of tennis pro, then worked for him in truck and auto parts. And at the end of the day, our families just want to see us happy. Yeah. Truck and auto parts was not my jam. I'm a sales guy at heart, and I just found that I could not talk hunting, fishing, and country music and pickup trucks. So, and I was too damn pretty for it. I'd be dirty and stuff. I don't get dirty. Anyway, again, Graham Massell Commercial Real Estate. How can they find you?
You can find us online, Massell.com. That's Massell.com. Massell Commercial Real Estate at Massell CRE on social media, as well as on LinkedIn, Graham Massell, fourth generation Atlanta commercial realtor.
I got all that?
You don't have to remember it all, but that's the basics. You can always call me on my cell for.
Fantastic. Well, thank you all for joining us for Putting the Real in Real Estate. I'm Art Wood, your host, and we'll see you next time.